All right, thank you everyone for taking time off to attend this virtual event held by Raffles Family Office. My name is Maggie Wong. I'm the Regional Head of Talent Acquisition based here in Singapore with Raffles Family Office. Raffles Family Office is an award-winning multi-family office with a very comprehensive suite of services for ultra-high net worth individuals and families. As an integrated platform that encompasses independence, advisory expertise, and a vast network of top financial institutions, we deliver bespoke wealth preservation solutions and build lasting family, investment, and operational governance structures for families. We are headquartered in Hong Kong. RFO has a presence in other locations across Asia, including mainland China, Taiwan, and Singapore. Now, today we are extremely privileged to have with us Mr. Georg, founder of WMRC, Mr. Simon Lints, strategic advisor of Raffles Family Office, Mr. Patrick Stauber, Group CEO of Marcuard Heritage, Mr. Georg von Wattenwayl, CEO of Vontobel Singapore. Thank you very much for joining us today. Can I hand over a short time to our panelists to give a quick introductions of themselves? John?
Yes, okay, thanks Maggie. Yeah, so very happy to be here today. I'm John, I'm the MD and also the founder of the WMRC. So my company actually specializes in hiring of RMs for private banks and also for family offices. So we've been active in this space for more than 10 years, in fact 12 years. And now we are, besides Singapore, we also very active in Hong Kong. Yeah, so if you have any questions regarding, you know, the hiring sentiments in this industry, whether especially for family officers, feel free to ask me later on in the Q&A. Thanks.
Thank you, John. Simon?
Thanks, Maggie. Simon Lints. I hope that everyone out there that's tuning in is staying safe and remaining positive in these crazy days, and hopefully we bring some nice stimulating conversation to this event today. So thank you. Very happy to be involved in it. I'm often wheeled out to these sort of things being called a veteran in certain quarters, but I think that just means that I've got more grey hair than anyone else on the panel. I work with big banks, little banks. I've worked UBS in the UK, Credit Suisse, Schroders in Asia, where I've been for 12 years. So I know the landscape pretty well. With those banks, worked with family offices, and now working with various interests. And it's a very interesting, exciting space, and I look forward to contributing and answering any questions during the course of this presentation. So thanks for allowing me to participate.
Thank you, Simon. Patrick, over to you.
Thank you very much. Thank you for having me on this webinar. After 15 years with Citibank and Morgan Stanley, I have made a conscious decision to switch to an independent wealth manager, or as you call it, family office. I wanted to escape bureaucracy, and Marcuard Heritage, founded 17 years ago, has allowed me to tackle new challenges for clients and employees. Today, I'm the group CEO of Marcuard Heritage and the CEO of the largest entity in Switzerland.
Great, thank you, Patrick. Georg, over to you.
Thank you very much, and as well, thank you for having me. My name is Georg von Wattenwayl, and I'm representing Vontobel today. Vontobel is a mid-sized private bank with a very, very strong investment arm. We are in Singapore now already since 8 years, and I spent most of my career, I spent at Vontobel, so more than 20 years, and the last 2 of them here in Singapore as a CEO of the entity here, covering the platform and service business for Asia.
Thank you, Georg. Thank you so much, gentlemen, for the introductions. So today we gather to discuss and the relevance of family offices. So Senior Minister Tharman said in a paper on the Straits Times on the 6th of October that there are 200 single family offices in Singapore managing about 27 billion of AUM. MAS and IBF together launched the Family Office Advisor Skill Map for aspiring wealth managers. MAS also noted that the number of family offices grew 5 times from 2017 to 2019. So the family office space is definitely booming, gaining a lot of traction in both Singapore and Hong Kong. After decades in asset management and wealth management space, today we want to discuss and find out why the banking and finance professionals are considering joining a family office as their pinnacle of their career. So may I now once again invite our panelists to share their views about this industry. So over to John. Would you like to share with us your views? What have you observed over the years, from a headhunter point of view?
Yeah. Okay, basically, what I see, right, I mean, with many of the bankers, especially the more senior experienced bankers, if they have worked with a few banks right throughout your career, they come to a certain point when they ask themselves, what's next, right? They've done all this, they work with the big banks, they work with the boutique banks, and maybe with the regional banks, the Asian banks, right? And then they start asking themselves what's next for them and for their clients, right? So there's a very natural kind of question that they will start asking. And then when they talk to their clients, right, they realize that clients have a few accounts with the private banks, right? And then they start also thinking to themselves how well they can do more for their clients, right? If they can gain traction with their clients on more of those AUM in other banks, right, then that will actually help them a lot in the business, right? So family office actually came about. I think they start thinking about it. They start seeing it as another option for them to consider besides the traditional private bank that they're so used to, right? So if they join a family office and then they can get access to more clients' wallet, they get a greater share of the wallet, why not, right? And then if they get more flexibility, more work-life balance, it is also something that appeals to them. Yeah, so this is what I see with many of the RMs that I talk to. Yeah, so maybe the rest can also share your opinions on this.
Yeah, thank you, John.
Yes.
I do come across those questions and observance from people that I meet in the industry as well.
Yeah.
So over to Simon. Simon, can you share with us what have you observed?
Yeah, no, certainly. I think, and I think also, the topic of today is about the relevance of family offices. So for that, read, why are they in the ascendancy? Why are there more coming on stream? Why are good RMs leaving the big banks and joining, which they undoubtedly are? And I think from my perspective, and I suppose I can speak from having worked in the big banks and smaller banks and now work, with family offices, multi-family offices, a lot of it's driven, I think, by the key thing is the absolute key is the relationship with the underlying family. And I think the big banks to a large extent have sort of maybe lost sight of that a little bit in terms of how they go about their business, in terms of product pushing, rather than trying to build the holistic relationship with the underlying family. And you've got your intergenerational transfer of funds, and there was a big report came out today, I think it was from Barclays, talking about there's concerns about trust and continuity of some of the RMs in the big banks. So I think external asset managers, family offices, multifamily, they're really coming into their own now. And I think during these uncertain times, through COVID, I think they've done very, very well because they've been closer to their clients. They have deeper deeper relationships with those clients. And I think when they're doing their jobs correctly, and so they see the whole of the client's assets across various platforms or different institutions, I think they get a better understanding of the client and are able to actually advise them more properly and more appropriately for them and for intergenerational types of things. So I think the big banks, in my personal opinion, are losing their way a little bit, and I think that will only become more difficult for them with costs rising and yields reducing and things like that. I think a lot of them are being found out during this period. They're not servicing their clients very well. A lot of them are having 1 week on, 1 week off for their RMs. There's no continuity. So I think family offices, EAMs are becoming very relevant and increasingly relevant in the marketplace. I think Asia's got a long way to go. You know, I'll be interested to hear from my European colleagues on this panel, where obviously family offices, and my experience in the UK, have been around a lot longer. It's now developing here, evolving here, but absolutely evolving very quickly and professionally, and it's exciting times, and I think it's most certainly the way forward.
Thank you, Simon. You're right. I think there's a lot that we can learn from in Europe and to understand a bit more. Perhaps over to Patrick.
Yes, I actually agree with John and Simon what has been said. Simon, yeah, I'm pleased to give you a bit of a background to what's going on in Europe. As you know, in Switzerland, the independent wealth management industry has established itself a few years earlier and is still growing. The independent wealth managers, or the multifamily offices in Switzerland, have a private client market share of an estimated 15 to just over 20%, depending on the statistics you're reading, and depending obviously the AUM, which is reflected in Switzerland very often with around 7 billion, obviously includes also institutional assets. This means that 2,000 independent wealth managers are managing around 500 to 600 billion US dollars, with the belief to be largest 30 independent wealth managers managing combined over 100 billion, Marcuard Heritage being one of them. So despite the fact that we have around 2,000 independent asset managers here in Switzerland, the number of asset managers or wealth managers managing over $1 billion is actually pretty small. It's estimated to be around 40 to 45 only out of 2,000. But the market is still growing. There are still private bankers taking into considerations, for the reasons you mentioned, to join a wealth manager, to go back to a holistic service offering, and not just portfolio management, which is very often the case at the private banks, including the typical, product push. Independent wealth managers, they have an open architecture platform, which is certainly helping also to increase the wallet share of the client.
Great, thank you so much, Patrick. George? George, are you around? So George actually moved to Singapore to start the EAM with Vontobel, and being a veteran in the industry, definitely would like to hear more from George as well. Will Singapore follow the Switzerland model? George, can you share with us?
Absolutely. So I think it's very interesting if you compare the two markets, which are in one way they are same. So I think that is something which we definitely can say, even though that we all know that Switzerland, this model is already since a very long time, and that is what Simon said. So is in Europe, so we know that model already for a very long time. While here in Asia, obviously it's a bit a younger model and it's just starting. And I think there is a great and a bright future for that market. So that's certainly one reason why I am here. On the other hand, I think it's as well, so we heard a lot now why let's say, bankers are thinking about to get in doing their own business and being closer to the clients and so on. So I think that is certainly one of the reasons. But then on the other hand, I think it's also kind of a demand which comes along. So families in Asia, they are very rich families. They are getting rich in a way, and in getting rich, so as well, your requirements when it comes to manage your wealth, when it comes to manage your fortunes, your assets are changing in a way. So there are new themes which comes along when it comes to governance. There are new themes which comes along when it comes to legal structure, tax efficiency. There are new things which comes along when it comes to investments. And so that is something like families are looking for somebody taking care in a holistic view. And that is a model which was very well established already, I would say, where there is all the money in a later, like for example in Europe, and it's really now very fast establishing in Asia, and I think that's a really a great development. And you asked me why I did the switch. So I think we as Vontobel, we always had a very strong focus on the institutional business, on the business with professional clients. And I would as well say, if you talk about family office, multi-family office, they are very, very professional when it comes to investment. And that's where we think we can support them. We can as well bring kind of a experience with us, and we can support them in the way that how they want to develop. And as well, and I think that is something which maybe Patrick can share. So there are a couple of very fabulous companies, multi-family office, independent asset managements, which are active in both markets. So which do have their roots in maybe in Switzerland or somewhere in Europe, and they do have their businesses as well here in Asia. And I think that's also quite a combination which we can support as well, which since we know with both sides, and we can support on both ends. And that's maybe as well something where we want to be active.
Great, thank you, George. I think definitely we see a lot of businesses between Switzerland and Asia, and rightly you've mentioned, because Singapore is very often labeled as the Switzerland of Asia. And for Patrick and yourself, I think there's a lot more you guys can share with us, because I think there were articles shown before statistic about 30% to 40% of the wealth is being managed by EAMs. Back in Europe and the US, whereas in Asia, predominantly Hong Kong and Singapore, it's only about 5%. Do you guys see the number going up in Asia? Perhaps Patrick or George, you might want to share with us.
So are you by that you think there's going to be an increase in the number of family offices here? Because I think we are going to see that. I think as bankers maybe become a bit disillusioned with the machine like bigger banks and coming out and trying to serve, as George said, there's demand coming from the underlying clients to actually encourage some of these guys to go it alone or go and join a multi-family office. I also see there's probably going to be consolidation in the marketplace, because some bankers come out and they think it's going to be easy to set up such an entity. It's certainly not easy in terms of the infrastructure, the licensing, the compliance requirements. So you do need to actually invest quite heavily to have that set to be successful. And there's a lot of very good family offices that have been set up, but I think some of them, for whatever reason, will probably look to consolidate or to partner with other ones. So I think it's going to be very interesting times, and I think that's only good for clients, for the underlying clients. I think they will ultimately be served even better, have a higher quality of setup, and relationship manager looking after them.
Yeah.
Thanks, Tharman.
Maybe just from a coverage perspective. So when I look at the market here a bit in Asia, so interestingly enough, if you compare as well to the model Patrick said, where we have 1,000 or 2,000 family offices in Switzerland. So here in Asia, so it is about you have to distinguish between so-called multi-family offices or external asset managers, which act with a license, which do have several families or wealthy clients they take care of, and so-called single family offices. And I think the single family office market, so what is concretely, what does that mean, a single family office? So I think that is a bit less transparent if you want to talk about the size of that market. So I think that's, so I don't have really an overview there how big that is. When it comes to the multi-family offices or the external asset managers, so there you have a rather kind of a transparency, and that there are around 200 now of them in Singapore and in Hong Kong, which cover about a bit more than 100 billion now on that market. So which are numbers which are already good for a couple of years in development. But if you just compare that to that, what the wealth industry is managing on their assets. So I think there you see that there is still a kind of growth perspective is going forward.
I mean, as said, we are represented in Switzerland and Singapore, and I must say I don't see or I don't notice any significant difference anymore between the two markets. Maybe in Europe the business is more based on an asset-based fee than in Asia, where there is still a transaction-based fee included. I see clearly a rise in Asia. I would probably say more in terms of AUM than in number of independent wealth managers or multifamily offices, because I think the regulation will force certain multifamily offices to join forces. I mean, an infrastructure is quite expensive. And maybe there is also a new business model emerging that, for instance, that the infrastructure is shared, but the brand towards the client remains independent. But the back office is like a common infrastructure. If I may say also something to the Raffles family office, I think especially the Raffles family office is in all aspects similar to a long established wealth manager in Switzerland. I mean, I follow them for a couple of years, and we visited each other already several times. And yeah, I don't notice any difference, but maybe my quote about not seeing any difference between Switzerland and Singapore is maybe too much focused on Raffles family office.
Thank you so much, Patrick. Couldn't agree more with you. I do have more questions since you guys are here. John, are you there? Because I see a rise of family offices set up in Singapore. And for John, I think his role is very, very similar to mine, talking to bankers in the industry day in, day out. So for John, when you bankers from private banks, I'm sure some of them might have asked you about and you must have seen bankers setting up single family office or a smallish multi-family offices for their clients as well. You run an independent headhunting firm for over 12 years now. What have you observed, and what is your what is your advice to the bankers who want to actually switch over from a traditional private banking outfit to a family office?
Yeah, thanks for bringing that up. I think it's pretty interesting. What I'm seeing in the industry, right? When I talk to some of the senior bankers, especially, right? They they you know, as senior bankers, they interact a lot with their clients. They're very close to their clients, right? So many times, right? They actually uh, get invited by the client to set up a single family office, right? So some of them actually, the client could be in Taiwan or China, and if they're here in Singapore, right, they could be given the job or the mandate to set up the family office here in Singapore. Yeah, so I do see that. So you see a banker like that, he make the transition from working in the private bank to now working for a client, right? And basically doing a different kind of role. He's no longer a private banker. He's more like a manager, a gatekeeper for the client, right? So I do see that increasingly in the last few years. More and more of these senior bankers are doing that. Yeah, so it's quite an interesting trend that I'm seeing. Yes.
Yeah.
Mm.
And why, if you don't mind me asking, John, what do you think is driving that trend? I have my own views on that, as I mentioned earlier on, but you know, joining a family office or an EAM isn't without risk from the individual perspective, because obviously
it is a big step, you
come
know.
from the nice cloistered environment of a big private bank with all the benefits that comes with and things like that. You have to have a lot of confidence in your own ability and your client base to make that leap. So, you know, what are your observations on that?
I think you know, over the years, if they have worked in the bank for a long time, right, they could see sometimes even difficulties in terms of you know, doing the best what they can do for their clients. Yeah, if they see that, you know, working in the bank can no longer allow them to do the best, right, for their clients, then they start thinking about something else. Maybe a family office could work, EAM could work for them. Yeah, so they start thinking outside of the box, right? They start exploring options. Yeah, so family office become one option that they start increasingly looking into. Yeah, because by doing that, if they can help their clients more, they can be more transparent, they can be less target driven, right? So those are all you know, in the best interest of their clients, right? And then hopefully they, at the same time, they're still able to earn, you know, good salary working for a family office as well. Yeah.
I think talking about salaries, a lot of bankers would be very keen to know, to understand a bit more. So what I always share with them would be being transparent in terms of the fee structure to their end clients, and being transparent to the payout from family offices outfit to the bankers, because end of the day, clients are their assets. They are the ones who bring in the clients, and we are definitely a purpose-driven industry. Right, not product pushing, not target pushing, like what John and Simon has shared. So Simon, definitely have more questions for you, but not to worry, it's not going to be about how much was the purchase in your previous role. Yeah. Now it's more rather than since we are talking about family offices and the traditional private banking outfit, you've been to both. You know, you have been on both sides. What have you observed, and why did you acquire an EAM organization in your previous role? And what attracted that particular institution to acquire the EAM?
Wow. Yeah, big question. Thank you. Yeah, I was teasing you earlier on. I can't disclose any details around the deal for obvious reasons, but it was well received by the market, and it was a bit of a breakthrough type deal. I suppose it was an evolution from having you know, been working in the big banks and then going to a smaller but extremely successful and a great name in Schroders. And it was very niche, it was small, and really to move the dial, we needed to attract bigger bigger clients, families, and ultra high net worth clients. And sitting in a bank, you get a portion of the client's overall wealth. You're not meeting their overall holistic needs. So I was very keen on the EAM space. I like it. I think it actually serves the clients better, because you have full visibility over all their assets with all the different institutions. So in terms of asset allocation and managing not just the investment, but everything around a family and their needs to really build up the relationship, I just felt that it was the right thing to do. So I studied the market quite closely for a long time, and the opportunity came up, and it was certainly something that was well received. It meant that we changed our operating process, if you like, and the way we went about business. But I think it's been proven to be very successful. I think the clients are benefiting from it, and it was a relatively bold move, but I think it's not the last one of that type that's going to be seen. As I said before, I think there will be consolidation. I think some of the bigger, stronger multifamily offices, EAMs, will buy up or consolidate within themselves some of the smaller ones. So I think ultimately the clients intergenerationally and families will benefit from that. So looking back at the time, it was a bit of an interesting move, but I think it was one. I think the market's calling out for such entities and operations. So it was the right one to do.
Great, thank you.
I think,
yeah, sure.
I think, Maggie, I mean, if I can take up again the compensation, I think a private banker must have the certainty that success is also reflected on the payslip. More profit should equal into a higher compensation. However, I think that the net pay to a senior private banker in our industry are more or less the same everywhere. I think what a private banker also needs to pay attention is that the family office has the necessary USPs in place. A relationship manager or a private banker should only move to a future-oriented family office, starting with the aging of the owner. Is there a succession plan in place? The aging of the client base, of the existing client base? Is there also some next generation program in place? And under the COVID situation, I think it's very important that this family office has a modern, highly secure cloud-based infrastructure. I think these are sometimes things you forget to check when you're looking at independent wealth managers. You need to have these ingredients. You know, you need to. It's not just the paycheck. It's also you need to have a setup which is actually serving your clients' needs. I think that's also an important point to take into consideration when looking at the independent wealth managers.
Yeah, and maybe I can add here. So I think that's a very important point, because I think it's a bit too, so we are thinking too short if we just compare wealth management in a private bank, which is should be product pushing and things like that, while independent asset managers then more servicing. I think that is not the full of the story. At the end of the day as well, the banks are getting better, and the banks are changing their setup maybe from a product more in a client-centric organization. So I know that by experience we did that as well this year. So I think that is something which you can't stop. So the banks are as well doing their job well, but it is again from a customer perspective. There are probably customers which are developing themselves, which do have their journey in the life and so on, where it becomes the better setup for them to have somebody who is independent, if you have somebody who has a holistic view, which you maybe don't want to share with your bank, or with somebody who where you can talk about themes like governance, next generation, and those things, and they do have access to all the different capabilities and that independently. I think again it should come from a customer perspective, and I could imagine as well that often those decisions for bankers to become an independent asset manager or an external asset manager is also driven by their clients. Maybe that they just encourage their bankers to do a step like that, which could be a model as well.
Thank you, George, for bringing that up. In fact, since you talk about, coming from the client's point of view and thinking on behalf of clients, I mean, for you, given that you're on the bank side, do you see the benefit working with officers like us? Because I do have questions coming from bankers before that how do banks view about working with family offices instead of hiring bankers directly to sell their products, to use their infrastructure and platform. How do you view that?
Can you repeat the question? I didn't get it acoustically well. Sorry.
So actually 2 questions. First thing first, do you see the benefits working with family offices like us? And I also have questions coming from bankers before about how do banks view working with multi-family offices or single-family offices about using their platform infrastructure to sell the products instead of hiring bankers directly into their platform.
So maybe where do we see our role as a bank now in that market? So I said it. So Vontobel is treating intermediaries and external asset manager family offices not just as a department within wealth management. I think that's an important thing. So it's not that the wealth managers do have some external asset manager which have clients again. So we have directly. So we try to be a specialist for our family offices. We want to provide access to the specialist when it comes to investment, when it comes to structuring, when it comes to other things, so that our clients, which are the intermediaries, that they are as relevant as possible for their end clients. So our job is to serve them, to provide them our platform, and to help them to fulfill their requirements their clients are asking for. And I think with that setup as well, I think it's something which is extremely good. We are never in a situation that we are competing in a way to our clients because we are there completely independent, but we are partnering with them. And so I think that's the way how we are doing it, where our DNA was as well for a very, very long time, and where we built up some very good close partnering relationships. So
Great.
that's a bit the model we are having, and also we are very lucky and happy to work with Raffles family office also in that manner.
Thank you. We are so glad to hear that, George.
Mm-hmm.
Yeah. So I think to answer some of the questions coming from bankers, we are definitely not up against banks. In fact, we are and to obviously cast the net out wide to serve our clients across the universe. So now we left about 15-20 minutes. Maybe we should open this up to Q&A. Unless panelists, if you guys have anything to add on right now, let me know. Jump in anytime. All right, if no, then I'll move on to our Q&A. Okay, so I see from Chris, so Chris is based in Taiwan. He posed about, he's asked about questions about having any obstacles to build MFO or SFO business in Taiwan. the good thing is that we do have an office in Taipei, a very successful one. How do you view it differently from Hong Kong and Singapore? Simon, would you like to share that since you've got a very good regional reach out there?
I think, you know, it's, as I said earlier on, I think the question is in terms of building the presence in perhaps different jurisdictions to fully serve the clients. I think that's what's behind the question. And it's obviously, it's not easy, as I was saying earlier on, to build something from scratch. It's expensive, it needs the expertise, it needs the capital investment. And I think if you are going to expand into other geographies, I think just given at the current time, it's very difficult, obviously, with all the travel restrictions and things like that. So I think that's certain players that have been able to do that ahead of the game. I think it's going to be challenging because I think we're now facing a lot of new realities in terms of lack of travel, and we're having to do things such as the Zoom call today. So I think it's quite, it really calls upon having built good relationships in the various jurisdictions to be able to work with sort of local players, if you like. So working with some of the maybe smaller new setups in those jurisdictions to be able to partner with them to actually expand your jurisdictional reach. But it's certainly not easy to get up and running in the first place. And that's why partnerships, as I say, will inevitably come along and feature more heavily, both cross-border and within various jurisdictions. So I hope that sort of answers the question. It's not easy, and I think it's going to call upon experience and very close relationships in different jurisdictions.
Sure, thank you so much, Simon. Since you talk about traveling, maybe I'll jump into one of the other questions that someone posted, asked about RFO having offices in other countries, and can they enjoy the mobility on location? So definitely yes. So RFO has got offices across Singapore, Hong Kong, Taipei, and Shanghai. And especially during COVID, we have seen bankers working in a very traditional banking outfit. They have not been allowed to travel, even though, you know, should they apply for business travel? I think some of the banks have restrictions on number of visits during this period. So basically, traveling is predominantly not allowed in certain setup. For RFO, we encourage, we do have the flexibility. So bankers can be based in Taipei, Shanghai, Hong Kong, or Singapore for a few months. And that's the benefit of our bankers working at RFO, and we do have support, like a full infrastructure and investment team support coming from Hong Kong and Singapore on the various deals that our clients and our bankers are working on. So it's definitely business as usual for RFO during this COVID situation. So let me move on to the second question coming from Stephen Lee. John, maybe you would like to share with us. May I know the stability and benefits working in a family office? I'm pretty sure bankers would have asked you that very often.
Yeah, well, they are very used to a stable base salary, right? For most bankers working in a private bank. All right, and most of them are also used to a discretionary bonus payout, right? So they're very used to that. So now if they move to a family office or EAM, right? So they have to have a mindset shift in terms of how they're remunerated, right? So yeah, so definitely, you know, they have to make some adjustment and get used to being rewarded more for the actual numbers that they deliver. Yeah. So that's actually a good thing for most bankers. They like that kind of transparency in terms of remuneration. Yeah. Sorry, did I answer the question properly?
Yes, definitely. I think I'm definitely with you, because I think there's a lot of very good performers out there in the banking setup, but you know, at the end of the year, they may not truly know how much they are getting paid in terms of bonuses. But over at family offices outfit, it's always about being transparent, right? So I think that's definitely one of the benefits that one of the things that bankers can look forward to when joining a multi-family office setup.
Yes.
Yeah.
Yep.
Simon, anything to add on with regards to that?
I just think it takes a certain mindset, which is a positive and entrepreneurial mindset for people to make that transfer from a big bank to an EAM. But that's a good thing. I think you have to have confidence in what you can deliver, and you reap what you sow at the end of the day. Various MFOs, EAMs pay differently and things like that, but you've got to weigh up all the benefits and the presence, the brand, connections, what the custodianships that they have, and there's a lot to consider. But it's not an easy decision to make. It's not for everyone, but I certainly praise those that do make that move.
Great, thanks, Simon. And I think from an investment perspective, coming from Brian the question that he posted, are there any specific trends that you are seeing? Active versus passive, traditional versus private? I think that's a very good question, because for bankers and clients who come on board to multi-family offices, they want to see what sort of value that we can bring to them, apart from what the traditional banking solutions that we can provide. So any gentleman, any one of you would like to actually answer this question?
I think family office are known to provide independent advice and also education on several asset classes, be it private market investments like private debt, private equity, to hedge funds, and also traditional investments like bonds and stocks. In terms of active versus passive, yes, there is a slight trend towards passive investments, but that changes now and then. I cannot say that we witness a clear trend towards passive. It also depends sometimes of the preference by the client and the risk profile of course. But again, a family office is obviously much more than just the on the investment side. It also needs to take into consideration what the client wants to achieve with the assets.
Sure. Sure. I think another related questions would be coming from this other attendee: how to convince clients to use the family office? Because family office is not exactly that well known in the market. I think he's referring to Asia. And secondly, why through RFO, but not directly through the well-known private banks? I think this is something that we have discussed earlier on. But John or Simon, I mean, you guys talk to bankers day in, day out as well. And Simon, you have been on both sides of the business. How did you manage to convince clients to use a family offices infrastructure platform?
Yeah, I think there's two parts to the answer to that one. I think the first one is, as I said earlier on, when you're in one of the big private banks, you're seeing generally, depending on the relationship that you have with the client, just part of their overall wallet. The multi-bank, so you see part of it. So you might just be looking after their hedge fund portfolio or their alternatives portfolio or whatever else. I think what you do is when you move to a setup and an external asset manager setup, you then have visibility, if your relationship is strong enough with that client, to see across all the different banks, and then in that case, I believe you can then advise the client better in terms of asset allocation rather than just seeing a little part of that. Plus also, if that EAM or multifamily office has set up sufficient number of custodian relationships with various players, you can then get the best for that client in terms of pricing and service or deal flow from that custodian and things. So I think it's a pretty easy sell to the client. You know, the custodian still remaining as it's been. They're just getting that added extra level of attention. And if their custodian's messing around or charging them too much, there is the ability to move it to get a better deal for the client. So as I say, if you explain it correctly, the concept really stands up quite clearly in enhancing the relationship that you have with that client.
And Simon, if I may, on top of it, you can obviously also provide consolidated reporting to the client. So he doesn't have to look at the statement of bank A, B, and C. You can give him a consolidated view. You can apply risk management measures on a consolidated way, which you cannot do if you work only for bank A. You never know what bank B is doing. So you can actually provide the client a much more holistic view of his investments through that capability, because as you know, we can access electronic data from those banks to transfer it or to interface it into a portfolio management system, which is a big advantage, I think, as well.
Can I also add something? Yeah, when I talk to the RMs, right, I think many of them, they are not they're not sure, right? Because it's a big brand from a private bank versus a relatively unknown brand with an EAM or family office. So they have, you know, they have concerns. They are not. They have questions about that, right? So they don't necessarily feel very secure. But once I explain to them, right, that actually even if they move to a family office, they still utilize the platform of the banks, right? They, in fact, the EAMs and the family office, they still work hand in hand in partnership together with the big banks. So it's essentially you're still utilizing the platforms, and the banks are essentially the holding custodian of assets, right? So once I explain that to them, they become less concerned about the risk and the unknowns. Yeah.
I think what you are saying, John, is a very interesting one, since that shows a bit that the model so far is not so common and not so well known today. So if it is the idea to compete in marketing with a brand, with a bank, so I think that is something which I wouldn't assume as the right strategy. So I think it's also, as we are sitting here, and it is for our industry as well, it is maybe as well a duty to do more that business model and the capabilities, and really from a client perspective, are better understood. So I think a lot of people know probably what the bank is doing and so on, but the model, external asset manager and so on, what does that mean? What are the capabilities? What are the advantages? I think there is still a lot to do for us as an industry, and to work into that. And that is also something where we should maybe as well think a bit about common initiatives, in a way where different players in the value chain, and we see it here, so there are different players which work for that industry, are thinking about what are the right things to do to make that business model more common and more known.
I agree with that, George. Yeah, I think highlighting the USP of a family office, right, is very, very important, because many people are new to it. Yeah, so if we can, you know, articulate the USP clearly to the audience, right, then it makes this whole concept easier to understand for many people.
It's maybe also a point that what means family office. So if you just enter family office into Google, you get a lot of things, but probably not that what our industry is doing. You know, it's also about there. So what is the concrete term which to use.
Mm-hmm.
Thank you, guys. That's very interesting. And I definitely agree with you. We do have a few more questions, but we're left with 2 minutes, so I'm just going to pick 1 or 2 more. So let me see. Okay. So we've addressed the bankers part in terms of the unique selling point and all, but for them to educate the clients from the client's point of view, what sort of things do they often find at family offices or EAM will be able to fill the needs much better than a traditional private bank? Can anyone give an example? Patrick, George? Patrick? George?
Can you? Yeah, I'll give it to George.
Yeah. So if I explain what the multifamily office can do better, so I come again to these 3 points. That's what is why is a client looking for a family office? Because he wants to get the governance, a holistic governance about his wealth. He wants to have the right setup, and he is keen to investments, and he wants to provide performance. He's on the same side of the table when it comes to doing the investments, because there is no conflict of interest at all. So he really is kind of the lawyer of the client when it comes to the discussion with all the suppliers and providers and so on. And I see it as well from another side, from a banking perspective or a supplier to the EIM industry. So I have to do an extremely good job at the end of the day if I know I want to be successful with that segment of clients. So external asset managers, multi-family office are extremely professionals. They have the whole bulk of suppliers which they can choose, and so they can really doing open architecture independently and go for the best solution available for the client. And I think that's probably an advantage they have, and if they are playing that quite well out, so that's a big advantage for the end client or the investor at the end.
Yeah, the independent wealth manager sits outside of the large financial institutions ecosystem. Hence, the wealth managers offer, as George rightly said, open architecture platform, starting with the selection of custodian banks, even multi-jurisdiction, which means you can also use a custodian bank out of Singapore in Switzerland or vice versa. And then obviously as well, the investment products, which you already mentioned. I mean, in a way, I call it the one-stop shop where you can get your things done rather than running from bank A to bank B, because also banks have their USPs. Some banks are quite generous on loan to value, and some banks are pretty good on other things, like Vontobel, as George mentioned, are quite strong on the product side. So they also have USPs, and so the independent wealth manager or the multifamily office can be a one-stop shop.
Thank you, gentlemen. As we are running short of time, but there are 2 questions that I think very interesting for us to address it right now. So let me just finish off these 2 questions and we can end our webinar. How do you address clients' concern with 2 sets of fees they have to pay to the family office, EAM, and the usual fees and charges to the bank? If I understand the question correctly, it's referring to the management fee, right? So basically, management fee is not an addition because the family officers do rebate back the retrocession. But Patrick, would you like to answer this in a more tactful manner?
Yeah, that's actually quite a challenge. And it's a challenge because the client usually doesn't see all the fees he's paying to the banks, be it on foreign exchange transactions, be it on mutual funds. so this is actually quite a challenge, and therefore it's obviously, you know, easier for large multifamily offices to negotiate good fees with the banks, so that there is something on the table which we can show to the client. But maybe Simon has something to add on that one. But this is definitely a bit of a challenge, this multi fees and the transparency we give to the client.
Yeah, I think we always emphasize about being transparent and a fee structure. Mm-hmm. Yeah. Okay, we moved on to the last question. What makes family offices and EAMs decide to partner with Vontobel over other private banks? How does Vontobel present its value proposition to family offices like Raffles Family Office? So obviously, Georg, I think this is a question posted to you.
Yeah, so I think as everybody of us, probably we can't do everything for everybody, and we have to think as well where we are strong and where we want to have our footprint when we serve our well-esteemed clients, external asset managers and multifamily offices. And I think now talking for Asia, certainly I would emphasize two things. On one side, it is definitely the investment part. So we are an investment house, and we want more and more become an investment house and not a traditional bank. So that is something which we have in our DNA since a very long time. So that's also where we want to be strong serving our clients. We want to help them to conduct their investment strategy. We want to provide them with the right solution they afterwards can implement for their clients. We want to do that on a very efficient and as well price efficient way. So investment for us is certainly one thing where we want to be good. And the second thing is we have a couple of multifamily offices which are thinking about diversification. So the client's wealth to diversify over different jurisdictions. And that is certainly something where we can provide a value. So having people here on the ground, helping to serve the clients, to do all the services, but then having the booking, the custody in Switzerland as a very safe hub. So that is maybe as well a unique offering which we provide. So for example, Raffles family offices who has clients which think about diversifying their fortune globally. So there we are certainly as well a partner.
All right, thank you, Georg. Thank you everyone for attending this webinar. Thank you our panelists as well as our attendees. We may not have time to answer all Q&As, so feel free to reach out to us directly if you have any further questions. You can link up with me on LinkedIn or connect with me via email or through our website, and then we can connect there. Thank you everyone. Have a good day ahead.
Thank you. Thank you very much.
Thank you. Bye-bye.
Bye-bye.